Working with insurance companies is enough to drive any sane person crazy. It seems like with precious few exceptions do I see that an insurance company has the best interest of their customers in mind. Hi everybody, this is Tracy Bookman, owner of Homestead Roofing, and on today's Walk in the Park video, we're going to talk about the 5 ways your insurance company avoids paying for your re-roof claim. Now a lot of you know that on our Walk in the Park videos we take time to talk about roof repairs, roof replacements, and the insurance claim process. But today we are in the aftermath of a hailstorm, and so we're in the thick of working with insurance companies, and it is just driving me crazy. So I want to talk about ways that we're seeing actively right now that insurance companies, especially the big ones, are avoiding paying legitimate claims to their customers for their roof repairs or their roof replacements. Tactic number 1 that your insurance company uses to avoid paying for your roof replacement is to raise your deductible. Well, what does that do? Well, that makes you liable for more of the cost of the roof replacement. Well, you think, okay, well that's legitimate, all right? If they've told me that they're going to raise my deductible, then I have the opportunity to go look for insurance somewhere else where the deductible isn't as high. Well, that's the game that they play though, isn't it? Because they tell you that they raise the deductible, but the way that they do that is by including that information in the declaration page that you get. Well, actually your policy renewal document that you get every year. And who takes time to read through that 25 or 30 page document when it shows up in your email or shows up in your mailbox? But that's where they've informed you that they've raised your deductible. Okay, but let me make a note, because you're probably asking yourself, well, that doesn't avoid paying for my roof replacement. You're right. But it's putting more of the share of the cost on you as the homeowner to pay for it. And so if your deductible goes from $1,000 to $1,500, the insurance company just saved themselves $500 off of that particular job. Multiply that by thousands and thousands and thousands of claims that they get. And a lot of times a homeowner's deductible isn't going only from $1,000 to $500. Sometimes it's going from $1,000 to $2,000, $2,500, $6,000. I mean, we've seen ridiculous deductibles recently as high as $12,000. Tactic number 2 that the insurance companies use to get out of paying for your roof replacement is they'll just simply deny the claim. Why do they do that? Why do they think they can get away with that? Because they can get away with it. What happens is, maybe a homeowner calls an insurance company and asks for an adjuster to come out. And if there's a lot of claims in the area, or if that company is suffering from a lot of claims because of catastrophes in other areas, they might simply just deny your claim, because they know that the vast majority of homeowners are just going to accept whatever the adjuster says. And if the adjuster says, well, there's no damage, or there's not enough damage up there to warrant a claim, the homeowner's going to believe him, because the homeowner trusts the insurance company and the representatives of the insurance company. And I'm telling you, that's not always the best idea. Sometimes that's an okay idea, sometimes that's an okay thing to do, but not always. We've had plenty of experience with insurance companies that have denied claims that have had valid damage, sometimes with hail hits as big as this, with holes going all the way through the shingle, and the insurance company denies it. Tactic number 3 that your insurance company uses to avoid paying for your roof replacement is to just simply fight with your contractor. So maybe your contractor has sent in an estimate, maybe your contractor has finished the job and has sent in an invoice asking for payment for a total dollar amount, And the insurance company will fight with the contractor about this line item or that line item or the price on this particular line item, or say we don't pay for that particular item to be installed or to be replaced or whatever. On and on and on it goes. All these just little itty bitty battles that your roofing contractor has to go through with your insurance company to get paid what it is that he needs to make to be profitable on that job and to sustain his business. But your insurance company knows that they have far more resources, both in personnel and in capital, to be able to fight that battle on an ongoing basis, whereas most contractors don't. So they just try to wear the contractor down, whether it's a roofing contractor or a general contractor or a siding contractor, it doesn't matter. They do the same thing with any contractor. They try to wear the contractor down because they know eventually the contractor needs to keep his cash flow going, so the contractor will just simply give up and accept whatever it is that they're offering to pay. Tactic number 4 that your insurance company uses to avoid paying for your roof replacement is that they prorate your replacement coverage. Well, what does that mean? Well, most people have what's called replacement cost value coverage on their insurance company, and they expect that their insurance company is going to indemnify them for 100% of the cost of replacing their roof or replacing whatever property it is that's damaged. And historically, that's been what has happened, is that the insurance company is paying the homeowner 100% to replace the damaged property. But what some insurance companies have started to do, and a lot of them are starting to follow suit, prorate that replacement coverage. So that means that it's no longer 100% indemnification, 100% replacement cost. So one proration schedule that I just recently saw from one of the major carriers here in town shows that you have 100% coverage for the first year. And that's the first year after you have a new roof installed. But then after that first year, in year 2, it goes down to 97%. The next year, it goes down even more. Until, like, after 10 years, if you've got a roof that's 10 years old, if you file a claim, then you're only going to get 70% of the value of that roof. So here's the implication to you as the homeowner. Let's say, just like has happened here in the Colorado Springs area, we get 2 major storms in a 2-year period. Let's say it's 5 years, and you're with a company that prorates your coverage. And so let's say by that 5th year, you're down to, I don't know, 90% coverage. What that means is that they're going to depreciate the value of the roof, and you're going to only get, instead of 100% of replacement cost, so that, you know, 5 years from now, whatever it costs to replace a roof, you would get 100% of that amount. Now you're only going to get 90% or 95% or 80%, whatever amount it is. So that 10% amount, hypothetically, that 10% amount comes out of your pocket in addition to your deductible. Again, they're not avoiding completely paying for your roof, but they're keeping back a significant chunk of change for themselves, putting that cost on you. And then when you spread that out over thousands or sometimes even, maybe even millions of claims, that really adds up to a lot of dinero for the insurance company. So here's tactic number 5 that your insurance company will use to avoid paying for your roof replacement. And it's called cosmetic exclusions. Now, there has been one insurance company, one of the major carriers, that for the last few years, that's been a big deal for them, is that they're excluding things that are cosmetically damaged, not functionally damaged. Typically, it's only going to be the soft metals, so vents, vent caps, gutters, that kind of stuff. So if it isn't functionally damaged, meaning that it still works the way that it's designed to work, but it just has some dents in it, they're not going to pay for that. But now insurance companies are moving beyond excluding just simply accessories like gutters or vents or things like that, and now they're moving it to a whole roof. What we're finding now is there's one of the major carriers here in this area that has changed their policy. So if in the past you have had an impact resistant roof material installed so you could get the discount from that insurance company that they offered, now you are subject to their cosmetic exclusion clause, which means that if they come out and if you file a claim, the adjuster comes out and he determines that the roofing material is not functionally damaged, meaning the hail hasn't penetrated it. If it's a shingle, it hasn't broken the mat. If it's metal, it hasn't caused an actual break in it. It's probably all bent up. If it's metal, if it's a shingle, it's probably full of pock holes and stuff like that. But if it's not functionally damaged, it's cosmetic damage, and they're going to deny the whole claim. Now, I heard about this just a couple days ago from an adjuster for that company, and he was complaining about it because he was writing up total losses for homeowners to get their roofs replaced, and the company that he works for was denying the claim. Boom, boom. Well, that's incredibly maddening. Sure, it's maddening for us as roofers because we rely on that work for our income, but for me it's actually more maddening for the homeowner, because the homeowner oftentimes doesn't know that's going to happen to him. So maybe he paid to upgrade his roof to an impact resistant material or something like that, and now it's gotten damaged because, you know, golf ball size, tennis ball size, baseball size hail is going to damage any roof material that you put on there pretty much. And so maybe he paid some to upgrade his roof, and now he's getting the unpleasant surprise of having a roof that's totaled and a roof that looks horrible, and he's going to have to pay to replace that himself because the insurance company says nada. All right, so 2 ifs. If you're an insurance agent watching this video, and if you've stuck with me all the way to this far, please let me make an appeal to you as an insurance agent. Please, if the policy that you're writing for your customer has these exclusions, has this kind of stuff in it, let the customer know. So that way they don't get a complete shock that they're going to have to pay out of pocket to replace their roof when it's legitimately damaged. So I know this is kind of a hot topic. It's a hot topic for me. It's a hot topic for adjusters as well. So if you've got any questions about this, please give us a call at our phone number right up here, 719-433-6991. You can also visit our website. That's right down here, homesteadroofingcolorado.com. We've got a ton of information out there, lots of other videos that will educate you on this whole process. If this video has been helpful for you, we'd love it if you'd give us the big thumbs up. Leave a comment in the comments section down below. Let us know, hey, what questions do you have that you'd like us to answer? What situations have you encountered with insurance claims that you'd like us to address? Also, please subscribe to our channel and be sure to click the bell icon up there so that way you get notified when we've got new videos. And until our next Walk in the Park video, I'm Tracy Bookman, owner of Homestead Roofing.